Well, good evening, ladies and gentlemen, and welcome back to Rainbow Investing, where we examine a spectrum of ideas to increase your long-term wealth. Now, tonight we're just going to do a video on why Warren Buffett won't buy Tesla shares. I just thought I'd make a fun video about Warren Buffett, his investing style, and why he definitely won't be looking at Tesla shares. Just before we get started, guys, if you haven't already, make sure you hit that subscribe button. We do videos on personal finance and investing, so if that sounds like something you're interested in, make sure you hit the button. Warren Buffett is without a doubt the greatest investor of all time, and so it's very important just to get inside his head a little bit and have a look at why he won't be buying Tesla shares. Because if everyone invested like Warren Buffett, there'd be a lot more rich people around than there are now. And I'm not saying that you shouldn't buy Tesla shares, because Tesla is a great company and I think their vision is really inspirational. But from a business standpoint, let's just take a look at why Warren Buffett, you can almost guarantee, will not be picking up Tesla shares. So the first thing I've got here is price. Warren Buffett is known to be a value investor, which means he's always looking for shares on the cheap. Tesla shares, as you may have known, are reaching record lows that they haven't seen for about 5 years, and have just gone under the $200 mark. Tesla shares almost a year ago were trading at over $380 per share. So this price crash is a huge change for any Tesla investor or anyone looking to buy Tesla shares. So as a value investor, why isn't Warren Buffett looking at Tesla shares if they are on sale like they are now? Well, Warren Buffett likes to invest in businesses with a moat. So a moat is an intrinsic competitive advantage that a company has over its competitors. Now, a lot of people say that Tesla does have a moat because they are the leading manufacturer of electric cars. Everyone knows that electric cars are going to become much more popular in the future. One, because governments are driving incentives for electric cars, because of the environmental benefits that electric cars have over traditional cars, and also because they are cheaper to run. Tesla has a very powerful brand in the automotive industry. Everyone has heard of Tesla, even if you can't buy Tesla cars. Everyone knows what they are. Even people who have never bought a car before know what a Tesla is, know who Elon Musk, the CEO of Tesla, is, know all about the company. But is this enough of a moat for Warren Buffett? I don't think so. Let me explain. If we look at two of Warren Buffett's companies that he owns right now, Coca-Cola and Apple, these companies have demonstrated decades of brand dominance through their brands. There's a reason why Warren Buffett only bought Apple shares in 2016, and it's because he knew that their brand was strong enough for future growth. Everyone knows that iPhones are expensive, but there is a huge portion of people that will go out and buy an iPhone even though it is more expensive than an Android phone or any other rival phone. They will pay a premium for an Apple phone, and they always will. That is called a moat, and that is what sets Apple apart from its competitors. Coca-Cola. How many people buy Coca-Cola even though it costs twice as much as any other brand of cola? It's because people know the brand, people know they like it, people know they're getting consistency, and so they won't buy a Pepsi, they won't buy a home brand cola, they will go for Coke. I don't think Tesla has this kind of branding power yet. It might in the future, but that is the one reason why Warren Buffett would be holding off. If we go to our third point here, history. Warren Buffett likes to look at companies with decades of history behind them so he can know where they're going. Tesla, although it has been around as a company since 2003, has a very patchy history. It has only started to mass produce its Model 3 car last year. Before that, it was much more of a niche car maker, and it simply doesn't have that history in the automotive industry that can give you a guarantee of the company's performance. Tesla has been growing so quickly that it's impossible to actually see how the company can solidify its balance sheet, can increase investing at a less crazy rate than it is now. Tesla is almost acting like a startup company, even though it's over 15 years old and Elon Musk has been there a while. Tesla nearly went broke in 2008 with the global financial crisis. There's just not enough history behind Tesla as a company to give Warren Buffett enough certainty to put his money behind it. Warren Buffett's famous first rule of investing is don't lose money. And his second rule is don't forget rule number 1. I just don't think Warren Buffett would look at Tesla and he would think, I'm not going to lose money in this investment because there's too much uncertainty. There's not enough good history there. And the fourth point I've got here is profit. Tesla, although it was profitable in the last quarter of 2018, has a very, very patchy record with income, with profitability, and there's just not enough level of profitability for someone like Warren Buffett to feel comfortable putting money into it. Tesla lost money last quarter. They've lost money for dozens of quarters over the last decade. They've needed to borrow a lot of money. They've needed to raise money from their own shareholders. There is a lot of uncertainty when it comes to Tesla's balance sheet, and no one actually knows how profitable they will be over the next year, over the next 5 years, over the next 10 years. Hopefully they will be, but we just don't know, and that's not good enough for Warren Buffett. Now, I'm not a Tesla hater, I'm not a Tesla bear. I'm just running through what investors like Warren Buffett like to see with investments and why he probably won't be investing in Tesla anytime soon. If Tesla proves it can get out of this stage and become profitable, sustainably profitable, Warren Buffett then might have a look at it, because then remember, he only invested in Apple in 2016. Tesla's not at that point yet. If Tesla gets to that point, someone like Buffett might be interested if he's still around. But investors like Warren Buffett don't like to speculate with their money. And I'm afraid at this point, investing in Tesla is still speculative, just because they haven't got that consistent profitability going yet. I hope they do, but they're just not there at this point in time. So there you go, guys. There's my reasons why Warren Buffett might not invest in Tesla shares anytime soon. I hope you found this video useful. Make sure you leave a like on it if you do. And again, make sure you hit that subscribe button. Really helps my channel out. Okay guys, thanks so much for watching. I'll be back with some more videos soon, of course. But for now, good night.